All right, good morning. Thanks for joining us today. My name is Jason Hamill, and I write a newsletter at goldstockbull.com. We cover precious metals, cryptocurrencies, cannabis stocks, and a few other sectors where I think there's tremendous growth opportunities and profit opportunities for our subscribers. So today I'm going to talk about gold versus crypto, some of the reasons I like to invest in both of these sectors, why I expect great returns from them in the future, as well as a couple of my top picks in each sector. So first, why own gold? And a couple of the obvious things: it's scarce, can't be printed out of thin air like fiat money. It's been money for thousands of years. It holds its value over time. You've probably heard the business suit analogy. 100 years ago, an ounce of gold bought a nice business suit. 50 years ago, 20 years ago, and the same today. It's a good hedge against global currency debasement, and we know this is happening with the race to debase, where everyone wants their currency to be worth less so their exports increase. And there's this concept of the Fed everything bubble, and this is the idea that the Fed has inflated so many different asset classes to overvalued levels that you want to have something that's non-correlated to those assets, and gold is one such asset to have. And it's a safe haven for increasing geopolitical tensions, which we're seeing on the Korean Peninsula, a proxy war that's happening in Syria and in other places around the globe. Silver I like because it needs to triple to return to its prior highs. And as mentioned, so many asset classes are at or near their all-time highs. It's nice to invest in something that has this kind of upside ahead just to return to where it was before. Increasing industrial demand, it rebounded for the first time in 2017, first time in 4 years, and that's behind things like solar panels, which demand for solar panels was up over 20% last year, electronics, medical devices, as well as military applications. Another reason I like to own silver right now in particular is because of the gold to silver ratio. You can see with this ratio that over time it's averaged around 60 over the last 20 years since this bull market started. It's averaged around 47 throughout the 20th century. 17 to 1 is the ratio in the Earth's crust. That was also the ratio in 1980 when gold spiked to all-time highs. Silver actually outperformed during that time frame. And it was 15 to 1 set in US law in 1792. Currently, we're right around 80. So relative to gold, silver is very undervalued, and I expect it to outperform gold going forward. So why own mining stocks? The obvious reason is the leverage that you get, and the way the leverage works is a 50% increase in the price of gold translates roughly to a 220% increase in profit margins for miners, right, at a fixed cost of around $1,000. So the gold price goes from $1,300 to $1,950, that's your 50% increase, and the margin goes from $300, right? If they're producing at $1,000, they're making $300, and at $1,950, they're making $950. So you can see how their margin goes up significantly more than the gold price. So it doesn't take a big move in the price of gold to see mining stocks shoot up dramatically. Out of favor, we like to buy things when there's blood in the street and the sentiment is negative, and that's certainly the case right now with mining stocks. And the majors need to triple in value. The juniors need to go up about 5x to return to prior highs. And some of the quality stocks that we track, I expect to go up by 10 times or more as gold moves back towards $1,900. Another reason I think it's a good idea to own mining stocks right now, start acquiring on this dip, is the HUI to gold ratio. So the HUI is the ARCA Gold Bugs Index. It's the top 15 unhedged gold producers in North America. And this is an interesting index to look at. Anywhere above the yellow line that I've charted here, and gold is undervalued relative to gold stocks. In those times, you want to own gold. When it's below, you want to own mining stocks. And right now, you can see the ratio is way down around 0.14. And it's actually like one of the lowest it's been of this entire bull market. And it's even lower than where it was at the dot-com bubble bust at this extreme. So going forward, as gold moves higher, there's an expectation that mining stocks are going to offer significant leverage to that price move. So why own crypto? I've dedicated an increasing allocation of my portfolio and our model portfolio to cryptocurrencies over the last couple of years. The obvious reason is for the returns. You know, Bitcoin went from 5 cents to $20,000 at its peak. That's a 40,000x return in 7 or 8 years. $100 turns into 4 million, $1,000 turns into 40 million. So there's an obvious reason there to be interested in this sector. But really, it's a better form of money, right? It's free market money. Nobody's forcing you to use it. There's limited supply. In the case of Bitcoin, only 21 million will ever be created, of which 17 million are already in existence. So 80% of the Bitcoin that will ever be out there are already trading. And actually, around 2 million are estimated to be lost and irrecoverable. So really 90%, probably 17 out of 19 million supply is already trading. Decentralized, and I put fair, and so you don't have central banks that have the power to print it and then give it to their member banks at very low interest rates who turn around and lend it out to the public at, you know, much higher interest rates. So it's a more fair form of money. And it's easy to use, store, and transport. You can send it across borders around the globe in minutes for pennies. I mean, we've never had this kind of ability to transfer wealth before. And the value comes from the limited supply, from the scarcity, and from the utility. Here's another reason to own crypto right now. This is interesting. This is the adoption curve of various technologies over the last century. And you can see, starting with telephone, electricity, cars, how long it took to get mainstream adoption and reach critical mass. And Bitcoin at the very bottom right, you can see, is right about there. So very low on the adoption curve. Only about 5% of people or less, it's estimated, own any Bitcoin right now. And the other thing that's interesting about this chart is you can see how long it took some of these other technologies to reach critical mass. And as you go across the chart, they get more and more vertical, right? So there's an expectation that there's an acceleration in the timeline of adoption. So not only is Bitcoin very early in the adoption curve, but we also have an expectation that the adoption will occur a lot faster than other technologies had in the past. And so I think it's a great time on this dip around $8,000 in Bitcoin to start entering or adding to your positions if you already have them. Of course, it's the anti-fiat money. This is what happens with inflationary currency. We know the dollar has lost over 90% of its value since the Fed came into existence. And this is what you could buy in 98, 2005, 2014 with $20. And in 2020, whoever made the chart thinks nothing, potentially. And with Bitcoin, what you could have bought in 2012, 2013, 2014, if we had 2017 on there at $20,000, you know, that's a decent car, a new car, a nice motorcycle, or a budget automobile. And by 2020, you might have a Lamborghini. Not that that'd be a good way to spend your money, but another thing in this sector I find interesting is the hostility towards it. From many analysts, many people in the legacy financial system, and from gold owners. They really, a certain percentage are very hostile towards Bitcoin, right? It's magic internet money with no backing. You hear this? What happens if the grid goes down? I always get this argument. And interestingly enough, there's actually a few cryptos that are putting low orbit internet satellites into space to have a redundant internet that can be beamed down to people. So even if the grid goes down on land, you'll still have a backup way to confirm transactions and to use the internet. But even if the grid goes down, it's going to come back up at some point, unless you believe civilization's over and there will never be a way to restart a grid and restart the internet. It's not really too much of a concern. It's a plot by the elite to enslave us and track all of our transactions. This, again, would be a really dumb plot on their part, because cryptocurrency challenges the very thing that gives them power and wealth, right? It's their ability to create and control currency. So why would they create an alternative to that? It simply doesn't make sense. Plus, there are coins like Zcash and Monero that have excellent privacy features that can't be tracked. Nobody's been able to crack that or find a way to track those currencies. So you can be completely private and anonymous using cryptocurrency. I expect Bitcoin and Ethereum to add privacy features at some point in the next few years. So again, a plot by the elite to create a competing currency to their fiat that you can't track doesn't make a lot of sense. Crypto stealing investment money from gold. A lot of my subscribers put this argument up, and that's part of the reason they don't like it. And this one's true. You know, I agree with this one. Certainly a growing percentage of my money has gone into crypto, and I know a lot of my subscribers have moved money into crypto as well. But it's a free market alternative. Nobody's forcing you to buy it, and I think competition is good. I think there's a lot of crossover between precious metals and crypto, right? They're both outside of control of government and central banks, both limited in quantity, and both allow you to transact in ways that you couldn't with fiat money. So I don't know if you guys saw on TV, but they had Buffett, Gates, and Munger on just completely trashing Bitcoin. They view it as a threat, the banks do, and they've admitted such in their annual reports to shareholders. Charlie Munger said it's antisocial, stupid, immoral, scumbag activity, as bad as trading freshly harvested baby brains. I mean, this level of attack, the verbiage they're using, it's so vile, and I think it's telling. You know, I play a little poker, and you look for tells in your opponents, and this is a tell that they're very threatened by the concept of cryptocurrency, and I think that says something for the longevity of what crypto can do. Bill Gates said he'd short it if he could, and this just shows that he doesn't know a lot about the market because you can short it. There's two different futures platforms, and there's a company called BitMEX that allows you to short with 100x leverage, so, you know, put your money where your mouth is, you have enough of it. Really what I think it comes down to is, you know, they say define your circle of competence and stay within it. And that's how to make money. That's how to do well in a career. And this is just outside of their circle of competence. They're great at what they do. The crypto world is not what they do. So I wouldn't pay too much attention when they get on the news and start screaming about how bad of an investment it is or that it's going to zero. The bottom line is they missed the single biggest investment opportunity of our era. I mean, from 50 cents to $20,000 in 7 years. Nothing else has really done that. And so I think not only is it a threat to their business model and how they got power and wealth, but it also attacks their ego and their identity, who they are as people. Like, I'm the greatest investor of all time, the Oracle of Omaha, the greatest tech innovator, yet I missed one of the greatest investments of all time. I missed one of the biggest technological innovations since the internet. So what does that say about these people? So, gold versus crypto, you hear a lot about this argument. I put forth that it's a false argument. They're complementary assets, and it's not an exclusive investment decision. You don't have to own one or another. Find the allocation that makes sense to you and own both. You know, gold's more stable, has a long track record, can't be hacked. You can use it if the grid goes down. Cryptocurrency is easier to store. It's a better medium of exchange. Can be sent around the globe in seconds across borders. Try doing that with gold or using the banking system really at zero cost. And it's consistently provided better returns than gold, with the exception of 2014 when there was a big correction in crypto. So, gold and crypto investors ought not bicker. They're more alike than different. Both allow you to hold wealth outside of the banking system and government control. They're both hedges against a flawed financial system. They both provide some degree of privacy, and they're both scarce in the case of Bitcoin. Another reason you want to hold these two assets is because they're non-correlated, again, to these financial bubbles that the Fed's created. So this chart is quantitative tightening, and we can see that when the Fed began tightening last year, look at what's happened to stocks since then. They had a little bit of it up, and now they're starting to trend down as rates go up and as they take the punch bowl away. So I want to hold assets that are not correlated to all these other bubble assets that are likely to decline in value at some point in the near future. Speaking of stocks, the cyclically adjusted PE ratio, the Shiller or Cape PE, second highest in history, right? Only behind the period just prior to the dot-com crash. And it's right now, stocks are more overvalued than they were on Black Monday or Black Tuesday or just prior to the Great Depression starting. You know, let that sink in a little bit. Another reason margin debt is at the highest levels ever. This doesn't end well. You can look back at history as margin debt increases, and then right when it starts to decrease, we tend to go into recessionary periods. And right now, every time margin debt had to reach higher and higher levels in order for stock prices to go higher, right? It's more leverage than it's ever been. So when people start to head for the exits, you're going to see a very severe drop in equity valuations. The amount of debt the U.S. government borrowed in the last quarter was the second highest ever, only behind 2008 during the financial crisis. They're going to spend $5 trillion for the first time in 2018, and deficits are going back above $1 trillion. So as debt and deficits rise, faith in fiat money declines, faith in government declines, and you want to hold these non-correlated assets like gold and crypto. And of course, they're both significantly below their highs. And I believe they both deserve a percentage of your portfolio allocation. And now, wherever your risk profile is, you can determine what amount that is for you. But I think it's crazy not to hold at least some position in both of these assets in your portfolios. And so, gold stock picks. The best returns to me are found in juniors and mid-tier. I'm looking for high grades, low cost, seasoned management, good jurisdictions, the ability to raise capital and protect shareholder value, accretive acquisitions, low cost of discovery. So these kind of are all the boxes we're looking to check when we pick out mining stocks. Kirkland Lake Gold has been one of our top picks over the last 2 or 3 years and has been one of the top performers, up 180% in the past year. They're targeting significant increases in production and have grown their resources as well. Costs are very low at $750 to $800 per ounce. And a couple companies that are here. I've always liked Alexco. You know, they stopped production when silver prices dropped dramatically, but they're a high-grade pure play on silver. They've increased their ounces significantly since they stopped production. They've been growing their resources, reducing their costs, and so they're considering moving back into production at the end of this year or during Q1 of next year. And when that happens, I think you'll see significant cash flows from this company, and this is a good time to be acquiring shares on the cheap. Another company here that I think is interesting, a junior, is called Bluestone Resources. They have a project in Guatemala with over 1 million indicated ounces at high grade, 10 grams per ton. Their PEA was very attractive. After tax came in at 44%. And they expect a full feasibility study by the end of the year, production potential by late 2020. Insider ownership is high. We always like to see that where shareholders, management's aligned with shareholders. So crypto picks. Again, 50% of my portfolio's in Bitcoin and Ethereum. I think it makes sense to own the big guys. Outside of that, I have a lot of NEO. NEO is a smart contract platform out of China. A very cool thing with NEO is they let you stake their coins. So you just from holding them in the wallet, you get about an 8% annual return, which they pay you in gas, which is their other crypto that's used for smart contract execution on their network. 0x is a really interesting project. I bought during the ICO. It's gone up significantly, but they have a decentralized exchange protocol. Decentralized exchanges are the new thing. They're going to be very big this year and next year. So instead of a centralized exchange that has possession of your coins, right, they never leave your possession. It's a smart contract, does the trade for you, and you eliminate third-party risk. iExec is doing something really cool with blockchain tech. They're pulling together unused computer resources from everyone on their network and then allowing you to buy that resource and essentially have the power of a supercomputer that you can lease for however long you want to use it. They're using this power to power decentralized applications in the blockchain sector, and they have some of the best tech guys working for them. I think this coin's going to do very well. Origin Trail is another interesting small cap coin. Blockchain-based supply chain management, right? Able to track their supply chain more efficiently, reduce costs, and improve their business process. The Contrarian Report's my newsletter. It's normally $4.95 a year. If you use CHVANC, you get it for $3.95. Just put in that promo code. And again, we cover precious metals, mining stocks, cryptocurrencies, and cannabis stocks in the letter. I have a couple minutes left, so if you guys have any questions, there's a mic there. I'm happy to answer any questions about gold or crypto. Okay, thank you for your time. I appreciate it. I'm at booth 114 in the back, and I'm happy to speak with you more about these topics, and I have business cards with that promo code on it if you weren't able to write it down. Thank you.